All right. What is up? And welcome back to another amazing episode of How to Invest in Commercial Real Estate.
Welcome back.
Are you guys investing yet or what? What the hell's taking you so long?
They are. They're investing so much that the last deal sold out in an hour and 45 minutes, which is pretty awesome. $1.2 million equity raise, I think.
And we're actually starting to discuss how do we go about launching these deals where we give everybody a fair shot. Mm-hmm. Because right now we've got the investor list has grown to a size where we're sending this out. A bunch of people are underwriting and looking through it, and it's already gone.
Yeah, and if you happen not to see the email for an hour and a half, then it's too late.
Yeah, and I don't want people wasting their time and not be able to get in. Yeah. So, if you guys if you're watching a podcast and you're like, I have some ideas on how they should do it to make it fair, shoot a comment in the comment section. We'd love to hear your opinion.
Yeah, and I think it's leaning towards just announcing when they're going to go out. We'll announce it a few days before or a week before. Hey, it's going to go out Friday at 3 p.m. Watch your emails, just so people have a fair shot. And then we also discussed possibly releasing some of the due diligence items, maybe earlier before we collect commitments. That way everyone has enough time to do their due diligence, ask questions. We can field some calls, emails, et cetera, and then open commitments after. So again, we're brainstorming ideas. We want to get as many people involved as possible.
Yeah.
It's a massive passion project of ours. It would be so easy to just take 2 or 3 investors' checks at $500,000 a piece. And it hurts us a little bit to turn those down. Not that we won't take them, we will on a certain deal. We're very purposeful and thought out about it. We'll do that over months of time. We want to allocate it. So anyway,
you know what's going to happen. We're going to release the due diligence, say it's being open 10 a.m. on Friday, and people are like, go ahead and put me down for $50,000 right now.
100%. And we're just going to have to say, no, you're going to have to do it Friday.
Yeah, that's probably what we'll have to do. Yeah.
I don't think there's going to be any perfect way to do it, but it's a good problem to have. We're providing good returns to people, and they're investing and partnering with us, and so it's working out for everybody's benefit.
Yep. Yes, so that deal was our deal in Lansing, shopping center. Little value add. We're doing a simultaneous closing on the Applebee's Outparcel. So the day we buy it, we're selling it and making money. That's awesome. That's going to be really cool. Like and again, it's sold out super fast. But the great news is we're in the business of providing amazing real estate opportunities. So we're going to give you another one.
Oh, yeah.
So there's several more. There's several more coming. We have a medical office deal in Atlanta. If you want to get involved in that, I think we've still got a few spots left. Super small equity raise. I don't even think we're launching that just to not piss everyone off.
Yeah.
And then the next one is a value add shopping center in Oklahoma. Should be coming out here sometime in the next month. And then several deals on the pike. I saw Jackson writing an LOI today.
Yep.
So a lot going on, guys. A lot going on. We're going to finish the year strong. And let's jump right in.
Okay, let's do it.
Okay, what's the topic for today?
So topic for today is 2025 the best time to invest in commercial real estate?
Well, we've been saying it is, right? Over the past few podcasts.
Yes.
And now we're going to say why?
Now we're going to get into why it could be, why we think, there's some stuff going on. You need to pay attention to what's happening because you don't want to be stuck on the sidelines. And I think a lot of people are still on the sidelines.
Yeah. Waiting to see what happens.
Yeah.
Yeah.
I don't think you should wait.
It's not unlike the economy in general, right? I mean, interest rates, they're waiting to see what's going to happen before they move on those. There's lots of business opportunities that people are just waiting on because they just want to see what's going to happen. With inflation, everything. A lot of uncertainty, actually, but.
Yeah, and really that's the first thing people say is, well, interest rates are expensive. It's like, well, I mean, what are you going to do about it? We can't really control interest rates unless you're going super low on leverage, and even then you may save, half a point or something. So it's really not a massive lever that we can move there. So at the end of the day, you got to add rent growth.
You got to adjust.
Yeah. I mean, think about this, guys. Your interest rates are high. They've been high, relatively speaking, for the last few years.
Yeah.
And we don't know when interest rates are going to come down, but I think there's a consensus that interest rates are going to come down before they go up. Mm-hmm. And so if you have an opportunity to get in to commercial real estate with a fixed rate now and the deal works, well, you're at least setting yourself up for the potential for interest rates to come down, which could increase your cash flow by either a refi or if you got a floating rate loan.
Yeah, and how we've been able to make these expensive interest rates work obviously it's way easier buying deals when debt is at 4%. You don't have to underwrite a ton of rent growth. Day one cash on cash is fantastic. You can assume everything goes to hell in a handbag and you're fine. You really don't have to do anything. It was a lot easier time to buy real estate. And that's why you have 15 groups bidding on the same deal and driving those yields low. Now you got to do something, right? Like debt is expensive. You think on multiple points on millions of dollars, you're talking about hundreds of thousands, at least $100,000 a year in difference. So you're making up for that through rent growth, right?
Well, yeah, two ways. You're buying at a higher cap rate, so you're going in with a little more cash flow, or you're trying to underwrite rent growth in the property.
Yeah,
to offset those interest costs.
Okay, but we talked about inflation. What about inflation? Shouldn't we be worried about inflation?
Everyone's freaking out about inflation.
Costs going up?
If you have assets, then inflation is good for you.
Why is that?
Because your assets are worth more, just like everything else.
Because they're going up.
Right. We're able to increase our rent just like the gallon of milk is increased, just like beef is increased. It's more expensive. Our interest rates are actually going up. Our costs to take care of the property are actually going up. To put a new roof on that property is twice as expensive as it was a decade ago, 15 years ago. HVAC units are expensive.
They're double.
Like all of this stuff is so expensive. It's not like, oh, well, we can charge more rent. Like, no. Everything gets expensive in the supply chain. It just trickles down, right? So inflation for us is how we're able to do these deals. 100%.
Yeah. Through rent growth.
Through rent growth.
Yeah.
We bought a deal in Victoria, Texas, and it's been owned by like the same dude, and the dude before that owned it forever. And they've done nothing with this property. You see rents that just haven't been touched in forever. It's like they live under a rock, not in the sense of just like nobody's looked under that rock. Like, I wonder if we should increase the rents. Yes.
Yeah.
Yes, you should.
But we're not just going in and increasing rents. I mean, we're putting a new roof on. We're doing some exterior paint. We're doing some parking lot work. We're going to make it look a little bit better. That's going to help us raise those rents.
100%. It's going to help the businesses, right?
Yeah.
Okay.
Well, a couple more points then on why it's a good time to buy now. Like I said, interest rates are one. We think they're going to start coming down. So right now is a great time to buy because if the deal works now, it's only going to get better if rates come down. Cap rates are another one. I think cap rates have been working their way up, but if you wait too long and interest rates drop, the cap rates are going to start working their way back down, and things are going to get more expensive because debt is cheaper.
Just like they work their way up and equalize, they're going to do the same thing.
And so, I think, if you wait till all the interest rates are back down to 4 and 5%, well, fine, but the cap rates are going to come back down too, and so your returns are going to adjust. Yeah. So I don't think you need to wait. Right now is a good time to be acquiring.
Yeah, at the end of the day, you want to be able to buy in every part of the cycle.
Mm-hmm.
Okay, next. Tons of opportunity, right? And here are several ways where I think, the opportunity is coming online. Distressed assets. Everyone keeps talking about this. I hear it a lot out there. What is a distressed asset? A distressed asset is, in my opinion, a seller that is maybe under a little bit of duress. It's not a true market, comp. Eventually, if enough of them happen, then it turns into a market comp. But it's somebody who needs to sell through whatever circumstance.
You think there's more distressed assets now in this environment than there were maybe before COVID? Any reason for that? Or
it's a good question. I don't know.
Are there always distressed assets? Is that what you're saying?
I think there's always some sort of distressed assets coming online, in any part of the cycle. But I think right now, specifically, there's a lot of sellers who need to sell. The people out there selling need to sell.
Yeah, and think about this. We had a window of 10 years or so that interest rates were super low. Mm-hmm. And so everybody's getting debt and buying these deals. And then the interest rates kind of went up pretty quick. Mm-hmm. And so as that debt matures, they're going to have to go from a 4 or 5% interest rate up to a 6 or 7% interest rate. And that could put some people under duress. If their cash flow hasn't increased, let's say they lost a few tenants and their income's down, and now they got to go put higher interest debt on, it could put them in a distressed position where they need to sell.
Okay.
It's not an accretive time for anybody. When you see debt being super cheap and the economy surging and you see record sale prices, sellers are selling for net dollars. They're capitalizing the marketplace. If somebody's selling right now, they need the money. They're not trying to time the market. They're not trying to maximize their net proceeds. There's something somewhere putting pressure on them to sell that thing.
Well, and it could be that some people are just selling because of timing or retiring or whatever, but we're looking for opportunities where we do feel like someone needs to sell, and there is some opportunity, to bring rents up to market, to go in there and infuse capital in CapEx type situations where we improve the value. So we think there's plenty of those out there.
Yeah. And I would say for the most part, we're not picking up ridiculously cheap assets. I would say we're making a good buy. We're getting a good price. A lot of our money is made in the underwriting, in the rent growth, right? Our ability to go renovate this property and convince these tenants to pay more rent. That's really where the money is made. And the seller is getting a pretty good price for the condition of the property when we buy it, in my opinion. Like we're buying on the in-place NOI, typically in between like an 8 to a 10 cap at the high side. I mean, those are pretty fair offers in this environment.
Mm-hmm. And I would say we're hitting rent growth projections and exceeding them in some cases. Some of the value add kind of not maybe distressed properties that we purchased, we're underwriting a 10% increase or so, but we're getting 20, 30 on some of these, which is incredible. And I don't think most people are able to go in there and kind of get those types of rent increases.
Yeah, and I think that is a good blend to the next piece about how, being small and sometimes only having 1, 2, 3, 4, 5 deals. For us, it's, a couple dozen. I still consider ourselves fairly small. Has a lot of advantages, right? Like bigger institutions in the form of those big check writers or the massive REITs or a lot of these people are really just now starting to get back into buying. And even then, it's not a whole lot. There's not a lot of competition out there because there's so much red tape and
that's what I was going to say. A company like ours can be so much more nimble. We see a property, we're gonna jump on it, right? We jumped on one today. We jump on one almost every day. Whereas a big institution probably has to go through a lot of approvals and
they don't want any issues or credit questions or hair on the deals. We say some messiness, and so some of the deals we're buying, they're not as clean as institutional players want them to be. Yeah. And so for us, we can though get around some of that and say, okay, no, we'll get our hands dirty. We'll do some CapEx. There's a few more unknowns that we're having to make assumptions where they just want the buttoned up, clean, Whole Foods, grocery anchored, retail center on the beautiful hard corner, and you're going to pay up for that.
Yeah, because their investors is institutional money as well, right? It's Teachers Retirement Association. They can't.
They don't want risk.
They don't want any risk.
And they get a lower return for that.
Yeah, that's right.
And so they if you're just trying to get your investors 6-8%. Then you can go buy the cream of the crop property with the best tenants, and there's not going to be a lot of upside, but they're going to be able to faithfully make those returns at least for the foreseeable future because of the length of those leases of the credit tenants. Yeah. We're not into that. We want our investors to get rich, and so we want to try to double or triple that return.
Yeah, and I would say as an individual or a small group, even like ours, those are hard deals to buy because when the REIT comes in and wants to buy it, they buy it in 30 days and they buy it in cash, right? And then they'll put financing on it later. We're buying this deal, right? It's very hard competition. You don't want to find yourself regularly competing with institutional investors. Most of the time, you're going to lose.
Yeah. Well, I think what else? Do we have any other points we need to cover?
Yeah. So I think a big thing here with timing, right, is you got to get in. You definitely have to get in. Waiting can cost you so much money, opportunity cost, right? You're going to look back 5, 7, 10 years from now and think, man, I really wish I bought something in 22, 23, 24, 25. That was the time I should have been doing deals. I'm telling you, people are going to be saying that. Because that's going to go down and it's going to be easy to buy real estate and this momentum's going to come back in and rent growth's probably going to taper off, for the most part. You're still going to have some under market tenants that you can get up, but it'll have been picked through by people like us.
Well, one of the mentors that I had early on, he was like, "You're going to hear people say, oh, I could have bought that shopping center for that price. I could have bought that house for this price." And he's like, "The difference is I bought it." And so you just have to you're either convinced in the value proposition of real estate, you're convinced that real estate's going to go up over time because of the built-in nature of inflation. And assets are going to be worth more in the future because the dollar that you're using to buy them is worth less. You either are convinced of that thesis or you're not. But if you are convinced, then what are you waiting for? Because buying makes all the difference. You can't win if you don't buy. And we've talked about it before. It takes courage to buy every single deal. Okay, so if you're listening and you're like, man, I never can find the right deal, or I never can convince myself to pull the trigger. It's hard for us to do it, right? It takes courage. Mm-hmm. It takes risk of failure. But those that do it make the money. And for me, early on, as I started to look, all the money that I had was all because I had the courage to buy. Okay, so I just keep telling myself that every time I look in the mirror and we're looking at a tough deal, I'm like, I don't know. Okay, does it work on paper? Does it hit our numbers? Okay, then we need to buy, because all of the money we have today is because we had the courage to buy. And so hopefully that helps you guys have the courage. Pull the trigger and get in the game, and know that you'll learn whatever you're missing once you're in.
That's great. I mean, that motivated me.
All right, awesome.
You gonna buy?
I'm gonna buy. Let's go. All right. We will see you next week, guys, on how to invest in commercial real estate. Thanks.